The U.S. reached its borrowing cap of $31.4 trillion on January 19. This might precipitate a fiscal crisis in the U.S. within a few months. Debate over lifting the debt ceiling in the U.S. Congress is raging, but neither Republicans nor Democrats appear inclined to move. U.S. Treasury Secretary Yellen responded by writing to Congress regarding the debt ceiling issue. The debt issuance suspension period began on January 19 and will extend until June 5 as a result of the Treasury Department using the debt ceiling exceptional measures to avert default. Analysts predict that this might result in the U.S. defaulting on its debt, which would flip the financial and treasury markets completely upside down sometime in early June. While the U.S. Treasury is halting the production of U.S. Treasuries in an effort to save itself, significant investors from central banks around the world are pulling out of or cutting back on their holdings of U.S. Treasuries. In November 2022, foreign private investors increased their demand for U.S. Treasuries, according to the most recent Treasury International Capital Report, which was released by the U.S. Treasury on January 19. However, global official institutions, such as central banks and sovereign wealth funds, sold off U.S. Treasuries for the 10th consecutive month. Among the top 38 significant foreign investors of U.S. Treasury securities included in the U.S. Treasury report. In November, the majority of U.S. Treasury debt holders, including Japan and the UK, raised their holdings. Only China and the Cayman Islands, which were ranked 6th in terms of places among the top 10 foreign holders of U.S. Treasury securities, decreased their holdings. According to the data, China sold $7.8 billion worth of U.S. Treasuries in November of last year, marking the third straight month of large selling. However, compared to the preceding 2 months, the scale of the sell-off was far smaller. According to a report from the U.S. Treasury, China's holdings of U.S. Treasury bonds dropped to a historic low of $87 billion in November 2022, the lowest level since May 2010. China has held less than $1 trillion in U.S. Treasury securities for 7 straight months, dating back to last May. After Japan, China continues to hold the second largest amount of U.S. Treasury securities. According to the TEEC report, Japan boosted its Treasury holdings by $17.8 billion, snapping a 4-month streak of selling. The amount of U.S. Treasury securities held by Japan increased to $1.0822 trillion. The position is still at a 3-year low, though. The only nation now holding trillions of dollars worth of U.S. Treasury securities is Japan. Following its first monetary policy meeting in 2023, the Bank of Japan resolved on January 18 to maintain its ultra-loose monetary policy, shutting out the chance of a short-term adjustment. However, when the BOJ starts to lose control over its financial system, it's likely to abruptly become hawkish in an effort to discourage the use of the U.S. currency. Wall Street is now concerned that Japan will continue to sell a sizable amount of U.S. Treasury bonds to support the yen and Japanese bond yields as a result of this. On January 19, a number of Fed governors reaffirmed their support for swiftly raising the target rate above 5%. President of the Street Louis Fed James Bullard predicts that in order to hit the inflation objective, interest rates would need to increase to a range of 5.25% to 5.5%. This indicates the biggest tail risk of increased volatility in U.S. Treasury securities and will hasten the rate at which foreign central banks withdraw from U.S. Treasury securities. The U.S. also leverages the hyperinflationary climate to boost the amount of U.S. Treasuries placed in an effort to offset the cost burden of issuing debt more quickly, which makes the $32 billion auction of 2-year U.S. Treasuries on January 18 the worst transaction ever. According to analysts, this amounts to a slow covered default on United States Treasuries, and it has already caused a decrease in long-term United States bonds in 2023. Up to November 2022, it is predicted that China and Japan would continue to sell between $700 billion and $900 billion worth of U.S. Treasury bonds. Since the Fed began raising interest rates in December of 2017, international central banks have collectively liquidated a net amount of $736.9 billion worth of U.S. Treasuries. In sharp contrast to this is the growth in the amount of gold they have in their possession. According to a study published on January 18 by the World Gold Council, the rate at which central banks around the world are acquiring gold is faster than it has been in more than a year. As of November of the previous year, there was no longer any connection between the dollar and gold. According to the statistics, a record for the most consecutive years of net gold purchases by central banks throughout the world has been set at 13 years straight, totaling 5,692 tons of gold. In December 2022, the world's central banks together acquired a net amount of gold equal to 50 tons. Following the first addition of 32 tons of gold to its reserves in November of the preceding year, China purchased an additional net 30 tons of this metal. A substantial amount of gold was acquired through this transaction. According to the data from the past, if China begins to increase the amount of gold it possesses, it is quite possible that it will keep purchasing gold for a number of additional months. The data on imports was just made public by the World Gold Council and Customs. Give your support. According to the data put out by the World Gold Council, China has kept its level of gold imports quite high, 138 tons in total by the month of November 2022. The amount of gold that China imported during the third quarter was 512 tons, which is much more than the average quarterly level seen since 2019. China brought in a total of 1,186 metric tons of gold during the first 11 months of the year 2020. This indicates that 1,186 tons of gold from significant gold markets such as the United States, the United Kingdom, and Europe were sent to China in the first 11 months of 2022. A portion of this gold may have been converted into gold reserves. A growing body of data suggests that U.S. Treasuries, the primary asset of the U.S. currency, are now bankrupt, and they are only being kept afloat by the overvalued U.S. dollar index rather than by gold. This is the only way the value of U.S. Treasuries can be maintained. The standard by which all prices of global assets are measured. These days, gold is a safer investment than U.S. Treasuries, the traditional refuge of safety and protection. The Federal Reserve and the United States Treasury both believe they have the ability to affect the value of the currency and the securities issued by the United States Treasury. However, this is not the case. According to the history of currencies, the Federal Reserve is far less likely to issue gold. Share your opinion in comments. Also, click on this video to watch about another shocking project.